Greece may not, in fact, trigger a Lehman-like financial crisis, which some were suggesting this week, but cautious investors are still looking for safe havens, which brings us, of course, to gold. It is off its record high hit back in May, but today does mark the fourth consecutive day that gold prices are climbing. Now, what is driving this recent upswing? And will we see a new high sometime soon? Well, my next guest has been trading precious metals and oil for 30 years. George Gero is Vice President of Global Futures for RBC Capital Markets. George, welcome. Great to have you here.
Thank you. I'm delighted to be here.
On Fast Forward. Well, it's a delight to have you. Let's talk about gold. There was a real pop this morning, similar to what we saw in equities, but lost some of those gains.
Well, we paired the gains. We had a big jump this morning. Well, you have triple witching hour, as we call it, for securities, options on securities. And you had the lowering of margins on the COMEX branch of the CME group, which helps individuals buy gold because they have to put up a little less money than before.
How often do they change those margin requirements?
Those margin requirements change not on a timely basis, but on a volatility basis, so that it's the question of how volatile is the market, over what period of time, and what price it is. Now, the margin obviously is going to be very different when gold is $1,000 an ounce or $1,540 an ounce. So that if you think about how much 100 ounces, which is one contract, is $154,000, you're bound to have a margin increase, which we had. But now gold in the last few days, while it's up, the volatility has decreased. If you look at the gold volatility index, which we just introduced, it hasn't been jumping. And so margins came off a little bit, about 10%. So now instead of putting up $7,250 per contract, you're putting up about $6,500.
All right, so clearly a lot of factors involved in pushing gold prices higher. When you were on last, back in November, we were talking a little bit about inflation back then, and then we saw that trade play out.
Look at corn today.
In the beginning of the year. But now inflation concerns have sort of taken a back seat to what is going over on.
Well, it depends from whose point of view.
Okay, so what is driving gold?
Inflation concerns are still here. Inflation concerns made China tighten recently, which is why copper hasn't been jumping up and it's below the 200-day moving average. Palladium and platinum haven't been jumping up in the last few days because the recovery in the U.S. is slow, and Japan hasn't started their full recovery yet, but they could by the end of the year. So between now and the end of the year, dealers who have amassed warehouses of material are hedging. They're selling some in the market just to be sure and to be safe.
Let's go back to gold for a second right now. What is this, a safe haven trade that we're seeing, or a pop in that stock? I mean, you mentioned margins, but let's just talk about sentiment.
I believe that gold has become another currency. And there are people who live in South America, who live in Eastern Europe, who live in Western Europe, who have concerns, political concerns, economic concerns. They take a portion of their investable money and buy gold because gold will, they think, believe, maintain their purchasing power. In the 1930s, a kilo of gold, 32 ounces, bought you a new Ford, Chevy, or Plymouth, and today does the exact same thing.
George, quickly, because we only have about 10 seconds here, gold, the price of gold, do you think we'll see a new all-time high hit sometime soon?
Yes, I think probably by the end of the year, if things don't even out. Next Sunday, you have a very important meeting in Brussels, and then you'll have an FOMC meeting a week after that. And so if we don't see a debt ceiling resolution, if we don't see improvements in recovery, it's very possible that we're going to see new highs. In fact, I thought that we might go up to 1585 in the next month or two if all these things don't work out.
All right. Thanks so much, George, for joining us. Appreciate your insight, as always. That was George Gero, Vice President of Global Futures for RBC Capital Markets.